Good morning, everyone, and thank you so much for joining us today for Hydraight's investor webinar. My name is Julia Becker. I am the VP of Corporate Communications with Hydreight. I will be moderating this presentation, and joining me today is Shane Madden, CEO, who is also the founder of Hydreight, and Vahid Shababi. Shane will be providing a recap of our third quarter financial results, including the 8th consecutive quarter of meaningful revenue growth. He is also going to touch on our quarterly operations and strategic growth priorities moving forward. Just a few housekeeping items. The presentation itself will run about 25 to 30 minutes, and then we'll open it up for about a 10 to 15 minute question and answer period. If you would like to ask a question, there is a Q&A box at the bottom of the screen. Please submit there during the presentation, and we will try and get through them following our discussion. A friendly reminder that this presentation may contain forward-looking statements which involve inherent risks and uncertainties and other factors that could cause actual results to differ materially from management's current expectations. As a reminder, investors are cautioned not to place undue reliance on forward-looking information, and that such information is considered reasonable based on the information available as of today. I won't bore you with the rest of that, but with that, I would love to pass the call over to Shane. Shane, the floor is yours.
Thank you, Julia. Hello, everybody. I'm going to start just maybe with an overview again, if there's anybody on the call who hasn't heard Hydreight message before or would like a recap. So I'm just going to go over kind of the vision, where the company fits into the healthcare industry as a whole, what problems we envisage solving from our inception. So I'll go from there. So essentially, we founded Hydreight in response to the fragmented healthcare system. Fragmented, even some people would be as sensational as say broken. But it definitely had issues that people were aware of even before COVID. So COVID shone a light on these things, but these issues in the healthcare system hasn't changed or hasn't evolved for quite a while. So Hydreight was kind of founded around that. So with the vision of being essentially the nation's first fully mobile medical clinic in all 50 states. So that was the vision. Now, the company gets referred to as the Uber for nurses all the time. That's because the platform was the first platform to allow healthcare professionals to actually work outside the hospital or the bricks and mortar physician office legally. So again, a little fact that most people don't know is that it is illegal in most of the states for nurses to work outside of a bricks and mortar unless they're on a medical structure platform like ours. So again, this is a necessity platform for people in the mobile medical industry. This is not an optional platform or an optional thing. One of the key, I think, components of Hydreight is we are a platform, a medical network at our heart. So all 50 states compliant with corporate practice of medicine laws. So when the nurses join, they're not doing anything different than they used to doing at a hospital or a clinic. So it is an easy transition. We essentially started off with a flagship product. With our vision was always to be fully mobile medicine, all products, and basically fill a void or a structural gap that I'll get to in a little bit within the healthcare industry. There's reasons that nurses are leaving. There was a report, the NSI National Healthcare Report this year, 2023, said that the RN turnover is 22.5% this year, down from 27% in 2021, which was obviously COVID. So the problem hasn't gone anywhere, decreased slightly, but the problems are still there. So what Hydreight is trying to do is essentially solve some of these problems. So if we unpack that a little bit, what are the problems and why do nurses leave? They're being overworked, underpaid, essentially. Their work-life balance is not sustainable. There's another statistic from the same report where 18% of all RNs that are newly licensed quit in the first year. So the problem isn't that the nurses, the problem is with the system, right? Everything is reactionary. Everything for the longest time has been this archaic reaction system. You go to, when you get sick, you go to the doctor, you go to the hospital. And that's just not sustainable. So where Hydreight's trying to fit in is right at the core, right at the structural level, where preventative healthcare, individualized healthcare, and essentially be that first line of defense. So Hydreight is essentially in addition to, in support of the healthcare system, not trying to reinvent the wheel in terms of how hospitals work or how physicians' office, but offer that structural support where everything can be preventative, so that hospitals and things aren't getting overwhelmed because everything is reactionary. So that's kind of the model. Obviously, mobile medicine across all 50 states, that structural piece where we are the first line of defense, but also offering that upside to the nurses to monetize their credentials. And again, this is a necessity. If a nurse wants to work outside of a bricks and mortar in any capacity, 1 hour, full time, whichever, this is a mandatory type of platform. So we basically solved a lot of barriers to entry. Obviously, proof of concept wise, we had to get a legal structure, a medical network that is compliant in all 50 states. We have to obviously solve medical direction. Every nurse that operates needs to have a medical director, again, all 50 states. Access to a healthcare network, i.e. Physicians to handle telemedicine calls, access to pharmaceuticals, malpractice insurance, and of course the proprietary software to be able to connect with the patients and obviously offer the care there. So that's kind of the high level of Hydreight. How are we doing? Obviously, we started off with one flagship product, which was IV therapy. Many reasons for that. One, it was attainable pharmaceutical wise. The second was all RNs can do that in all 50 states. And again, that was the perfect way to build our network because it was very much in demand from the patient side. IV therapy, most people know a little bit about it, but it's the first thing. You're going to get an IV drip when you walk into a hospital. It's the first thing they'll do, before they even know what's wrong with you. So it was very much in demand on the patient side, and it was the perfect product to actually build our network on. Since then, we have branched into other services to obviously align with the overall vision of being mobile medical network across all 50 states. So we've branched into aesthetics, which again was more for the nurse to be able to monetize and be able to offer more services. But from a medical perspective, we branched into NAD+, semaglutide, which we all know about in the weight loss, diabetes side of things, and into the lab testing and home healthcare side of things as well. So that's essentially kind of the trajectory of the company. Some of the results that we go into right now, you'll see have some of the services we've rolled out have affected those numbers in a very positive way. We've just completed our largest quarter from a top line perspective, and essentially we'll go into some of the numbers in a second. I would just like to touch on where the company is at right now. If I was to give it, from vision to completion, I would say that we're on the first floor from a revenue perspective of a skyscraper, but we have spent the last 3 years building out our platform, and we have just started to move into these other services. There's 2,600 nurses on our platform, yet there's 4.5 million RNs in the United States. So again, all of the upside, in my opinion, is in front of us from a vision perspective. So moving into Q3 financials, obviously, our best quarter to date within the company, our 8th consecutive quarter of meaningful revenue. Our top line adjusted revenue was 3.97 million, which brings us to 12.06 million for 9 months of 2023. Our GAAP revenue was 3.09 million, which was an increase of 172%, and bringing our 9 months 2023 to 8.14 million, an increase of 216%. Our gross margin is 41%. And for anybody, we have 3 revenue streams. So our kind of gross margin across those 3 revenue streams, our software side, our pharmaceutical side, and our services side is gross margin of 41%. So if we move on to kind of some of the highlights, looking within the quarter that had pretty much an effect on those numbers, which were again fitted into our overall vision. We expanded our services, which I touched on, to 650 cities across all 50 states. We onboarded 318 nurses in Q3 2023, which brings us to 595 nurses for the year onboarded. And as I said, we have 2,600 nurses on the platform, with 4.5 million nurses, well, RNs to be specific, in the country. Some of the onboarding increases there are due to technological builds that we did, so additions to our software to make some aspects of the onboarding more seamless. We also added some very key personnel to those divisions, and we've seen a dramatic increase in the speed of people going from sign up to live. So we're very excited about that. We increased our doctor network to over 100 doctors in all 50 states. This is in collaboration with the movement into these other services, which are essentially higher level of medicine in some regards, but also because the laws have been relaxed after COVID. Laws were relaxed during COVID, and these laws are now coming back. There's now a compliance side of things where telemedicine is a core piece of any service that's being given mobile. And that's another reason that separates Hydreight, is we were formed to fix that gap between the fragmented healthcare system and the patients. So we were formed not only before COVID, but with that vision in mind. So other companies have struggled since these laws have come back, but Hydreight has only gone from strength to strength because of our structure. Expanded our white label solution, partnerships with 90 plus locations and growing monthly. For anyone who's heard any of our webinars before, we did take advantage of some of the industry core problems that we were fixing, like our compliance, our PC structure, our doctor network, our access to pharmacy. All of these things that we built compliantly and put the software on, we solve those for other areas of the industry. So we were very attractive to bricks and mortar solutions to use our software, use our platform, but not necessarily work in the traditional way on Hydreight. So we have a number of those, and again, a lot of the upside for those relationships are in front of us. Some of these relationships are young bricks and mortars with multiple 600 plus locations sold, but maybe only 55 or 60 live. So again, all of that opportunity for revenue is in front of us. Launched a new website booking system. Again, we're in soft launch phase with that. One of the challenges of any groundbreaking, disruptor, I guess if you want to call it that, platform, is we have to be around all 50 states. We have to have enough of a foothold from a provider standpoint before we really start getting behind the patient side. We don't want to have somebody looking for a service because they've heard of us and there's nobody around to give that service. So we focused heavily on that side of it, and launching this new website is essentially focused on driving, customers and aiding the providers with being busy. So that's some of the highlights for Q3. Just moving on now to what we see happening in the next 12 to 18 months. Again, there's 2,600 people on our platform right now. We're on track to do between 16 and 17 million top line for the year this year with 2,600 nurses. There's 4.5 million RNs in the US right now. Again, that is that is such an opportunity that we don't want to be distracted. We need to focus on that. What we've built is incredibly unique, incredibly attractive, not only to the nurses, but to potential white labels. And we want to remain completely focused on that. Obviously branch into other opportunities on the M&A side, which I'll touch on, but that's our goal, is to completely push the vision now that the platform is set up. Adding the additional products, like I said, was merely just the next step of the overall vision. We had to start off with one product or two products to get that platform, and now we can branch into the higher levels of medicine and more of the essentials. I mean, that's the goal. When I touched earlier on how Hydreight is fitting into being an addition to and support of the overall healthcare industry, this is where we're going. We envisage being the mobile force for hospitals, the mobile force for healthcare, home healthcare, and essentially, being the first line of defense for the reasons that the system are in trouble is because it's always reactive. So, that's one of the big initiatives that we see coming. But again, it doesn't, you can see our revenue projections, and our growth is in an incredible scale anyway. So driving sales with our white label solutions through our direct sales to the bricks and mortar. So again, I touched on this a little bit earlier. We solve a lot of the core fundamental problems within the industry that bricks and mortars, medi-spas, health clubs, even doctors' offices, when they want to start going into other services and mobile. Our platform solves a lot of those. So if they're not big enough to be a white label, we're also going to have an offering on the Hydreight platform that they can operate as well. So they're not necessarily falling into the NURS category, but we can solve their problems from whether it's telemedicine, access to pharmacy, access to a physician network, whether it's joining our medical legal platform, if it's a corporate practice of medicine issue, we can solve all of those things. And as I said, then moving into kind of strategic M&As to help grow the business, we would look at those in a couple of areas. Obviously, if there was an opportunity for a lot of nurses, so a nurse group, nurse recruitment company, anything around large groups of nurses that could actually benefit our platform, we would look into that. We already are looking into a few of those. There's some other software opportunities to offer possibly bricks and mortars. Again, align with our goal of branching into that user type. Something that we may not have offered before, but we could acquire and then kind of join forces and have a slightly different offering there. So those are some of the big ones for where we see ourselves in the next 12 or 18 months. But again, the opportunity from what we've built is only just starting to be explored. I think we've built a lobby. we're at ground one in a skyscraper here. So next slide then, I think, Abby, I think that was possibly it on the slides. Yeah, so that's kind of high level. I look forward to any questions on this. Obviously, I'm always very excited to talk about Hydreight, so looking forward to hearing some questions.
And thanks, Shane. Great job. Just a reminder, if you do have questions, please submit them to the Q&A box at the bottom of the screen. And if you're ready to go, Vahid's going to join us in answering some of those Q&As. I'll just jump in if that's okay. Perfect. Okay, so when we look at revenue for Hydreight, you touched on kind of the three main revenue buckets. Obviously, white label has just been launched, so we can probably expect that to be contributive as well. But in terms of the current split, how would you split kind of that top line revenue in terms of the mix across the buckets? And what can we see? Or sorry, what can we expect moving forward?
They're pretty even at the moment, I would say, again, just for anyone who on the call. So we have a software as a service model, which is approximately $3,000 to $4,000 for the year. That gives them access to medical direction, doctor network, the legal side of things. As I said, again, they're joining a medical network. That's what we are at our core, with the software sitting on top of that. So that gives them access to be able to do mobile medicine. Then we have the access to pharmaceuticals, and then we have of course, the services themselves being done. So, of course, our focus has been on getting the foothold across the country. So our focus has been on getting as many nurses as possible. That, of course, leads to the pharmacy being pretty good because they have to have pharmaceuticals in order to provide the services. And finally, what we're doing then is focusing on the amount of services being done. And again, we had to have that foothold to be there. So I do see that basically taking off here in the next 12 months in a major way. Because of the uniqueness of our product, our software as a service, so basically the amount of nurses coming on every month is incredibly consistent. And for anyone on the call that doesn't remember, we do events like the Nurses March, in Washington, D.C., where 40,000 nurses marched, from the White House to about poor conditions and all of that. We do that. There was a group attached to that had 250,000 nurses in it. And the interest is still, that was a year and a half ago, and we're still 3 weeks out in advance of people wanting to speak to us. And one of the inherent challenges of any new platform is that educational piece, right? Some nurses don't know that it's illegal to work outside the hospital in this manner, right? So we've been doing that educational, and this is, I think, why we see the last 12 months, specifically 18 months as a whole, I guess, we've seen that spike because the learning curve is kind of over now. They know that this type of platform is there, and what the opportunity is.
Awesome. Thanks for that. Okay, a little bit more of a technical question here on revenue. According to GAAP, 2023 Q3 had greater losses than Q3 2022, and the company currently has an increasingly large working capital deficit. Kind of provide comment on that, and what do you have in terms of plans moving forward to improve those metrics and get to GAAP cash flow positivity, please?
Yeah.
Sure. I can jump in. So that's a great question. In order to answer to that question, I'd like to walk you through a few different things. The company is growing. Usually in the SaaS business, 40% is a top percentile for year-over-year growth. Now, we're year-over-year having over 100%, and 200% growth that we're doing right now. So basically, we're paying the price for this growth. The company could have been profitable on the GAAP basis if we wanted to slow down the growth and have less revenue. But right now, when we're looking at this is the money that we're paying to bring the growth from a few different angles, and I'm going to break it down. First of all, our numbers are GAAP based. A lot of private companies, they report based on the cash base. If you look at the cash base for our company, for most months, our revenue is higher than our recurring operational cost. The biggest difference between the GAAP and the cash base that we have today is the subscription. We charge a subscription up front, and in the GAAP, that will be amortized over 12 months. So company is not losing money from the bank account on the month-to-month basis for most months. Now, there are months that we invest heavily in the company. Now, that investment, when we look at it, for every dollar that we put in, what is going to get in return? Some of the big investment we've done in last 3 months and 3 to 5 months is around legal and around technology. We engaged one of the very unique legal firm in the United States, spent about over $300,000 USD between that and our medical legal team to go review every legislations for medical board, nursing board, and for a pharmacy board for 50 states to come up with the flow of the patients and service professional with all the do's and don'ts. That makes us very unique in the market. Now, getting that, we had to translate that into our technology. The technology that you see Hydreight having right now, it's way different than 12 months ago. That opened another market for us. Now, with the new technology, we can start being a fully SaaS company and selling our solution as a white label to other service providers. There are very handful of companies doing SaaS in medical without even having a full access to the pharmacy and full access to the doctor network. You can look at like Wheel or look at like True Pills. They are the SaaS model. Now, because the whole thing has been very unique, as Shane mentioned, we've been approached by multi-location organizations that they have 60 to 600 locations to come and white label us. And we keep our 3 revenue streams with them: pharmacy revenue, service revenue, and also the SaaS revenue. So that brings a higher enterprise value for the company, for the investors, and for our clients. Now, I've been part of multiple different exits in SaaS. And one of the biggest factors that when the company is going through the growth is how you serve your customers. because you can grow the business and fuel the fire with sales and marketing. But if you won't be able to serve your clients, you're damaging your reputation, especially in a very small industries, which is there's some community base. So we had to make some improvements in the last 9 months within our service within the team. Now, adding the success department, changing the onboarding department, coming up with our own training center with full videos that everyone can have access to at 24/7 and get onboarded, improving on onboarding, a number of the onboarding days for our nurses to come on board. Now, the other aspect that we've done investment is when you're a public company, you have two companies to run. We have our operation and our public side. The cost for the public from the audits, legal, IR, attending events, and introduce the story to more investors and potential investors, that by itself is another category of the cost that we have. Our company actually being operated very lean. The team is about 25 people with all these revenue that we're bringing. Now, if you compare the company with the company like Uber, Uber has been, was losing money during the growth because you spend money on your technology as an IP, as a SaaS company like Salesforce, or you're gonna just invest in tapping into a market and start getting a market share, and then you can capitalize as the first company or one of the first companies in that sector. If you look at the Salesforce, from year 1 to year 4, they were under 25 million revenue until year 4. Like the third year was 5.97 million revenue. Now, if you compare our revenue percentages with our cost, we always look at that. But again, I emphasize on the fact, if you look at it on the cash basis, the company for most months on our revenue is more than our operating costs. Recurring operating costs that we have. But we're not shy to invest in what is going to bring value for the company in the bigger scale to do that. Now, there is one more category that in last 6 months we focused to make sure that we invest. I think for every high growth business that is going through a business, the best and the biggest assets is the team. The team that we have, with most of the people who've been with us in past 3 years, if not longer. And they've been working on, they believe in the company. They work hard, they put their heart into the business. And, all this time they were around with a discount rate on their pays. So we wanted to make sure not only they, being rewarded for what they do, but also they be motivated for the company's growth. So we started tapping, into our RSUs and options, and all the advisors, consultants, employees that have been with us for longer term, based on the impact that we have on the business, we tried to issue those RSUs and options. So they all feel as a partner and they're engaged. And based on TSXV rule, there's minimum 12 months vesting, so they have to continue being motivated on providing that. And again, the cost for losing a long-term employee is a lot more than saving it, because now you need to have new people to understand the business, go through it and all that. So that's kind of the answer to your questions. We're on track, and we're projecting that even on the GAAP basis, we'll get to the cash flow positive in early 2024. But on the cash basis, we have it under control and we're moving the business forward. So I just wanted to go into more details as far as what has come as a cost in our balance sheet that shows our GAAP deficit that much.
Great, Vahid, and thank you. Just on that vein, another question. Can you just talk about the current cash position, or with these quarterly deficits, how long the company can continue to operate with the current cash?
So as I mentioned in my in previous answer, because on the cash basis, the company for most months were ahead of our costs, we don't see any threat from our cash balance that will be affected. Our burn is very minimal when we look at on the cash basis, if there is any. So we don't anticipate to run any problem from cash perspective. And again, what I want to remind you that this business is very unique, that we have different revenue streams that each is going to open new opportunity for us. We have a pharmacy, online pharmacy that by itself, we're going to go on and start getting clients. We have a SaaS business that by itself, we're going to get white label clients. We have a Hydreight as a network that we created it, and the nurses come on board is its own business that we're doing that. And these are the three revenue streams. And some of the acquisitions that we lined up and we're working on that is going to add additional revenue stream that also is going to help with our capturing the market share in the industries that we're in.
Perfect, thank you. And I just want to be cognizant of time. We've got about 10 minutes left. We have 8 or 9 questions still to get through. I don't think we're going to be able to get through all of them. But as a reminder, please just reach out to me directly and we'd be happy to answer any questions. So do you see improved profit margins on pharmacy as you move into NAD and weight loss drugs, I guess, and also including volume? Also, with increased volume of sales, can you negotiate better prices on the IV drips and vitamins?
Yeah, yes to both is the short answer. Whoever asked the question is right on the money. That's exactly how you do it. So because of our presence in the industry, we can essentially, we review these things on a quarterly basis with our network. We can obviously, with our buying power, obviously move the needle. Now there is obviously a stopping point at some point, but it's we do see increased margins. One thing to touch on regarding the semaglutide that I should have probably brought up a little bit earlier, the way we offer it is going to be very, very different. So the industry, the way it's done right now is not the way it should be done. So our platform is going to have a service provider go out and actually draw blood. That gets back within 24 hours. It's seen by a physician. Essentially, then the semaglutide is sent out. These things are patient specific, so they're going to be sent out directly to the patient with the oversight between the service provider and the physician. That is not done in the industry. That is not done right now. So we're not only offering the opportunity for the nurse to monetize, but we're going to be incredibly competitive for the patient. And it's the highest level of care that's currently done in the industry. So again, without the network, a platform that we have set up where it's service provider, physician, medical director, pharmacy, it's impossible. And that's why they're all cutting corners. And that's why there's problems in that sector because of the level of care. So again, our opportunity in that space specifically is absolutely huge.
And then Shane, on that, how much flexibility do you have around creating custom IV drips for white label clients?
Yeah, again, that's just a conversation simply with the pharmacy vendors. That can be very easily done. I mean, big picture, if you wanted to look at it, and again, this is one of the things in our M&A, is essentially accessing our own pharmacy, our own clean room. When I say own, I mean managing it wise. That is an opportunity that would have obviously a very large X. But within our current network, we are essentially the best. We're the biggest customer in the country, and we are the best priced.
Just to add to that, Julia, one point to be added: any of the menu that goes out, it's been designed by our pharmacist, and our pharmacy designed those custom design for Hydreight, and any of the white labels that is only we put that menu together. If somebody wants to have even more further customization, that's extra cost that our pharmacist is going to work with our medical director, and they're going to put it together with the policy and procedures for the patient side.
Great, perfect. More on the capital markets. Why are the shares trading so far behind the company's great success? From an investor's perspective, it's very disappointing.
That's a good question. Trust me, like after all these hard work, when we look at the stock price every day, we get the same feeling and we just want to be rewarded. But there are a few different factors. One, when you look at the entire volume in the small market cap in Canada, everyone has been affected by that. Definitely, we don't want to use that as an excuse to stop our effort to improve that end, because that's definitely one of the KPIs that our board, our management team, and our team reviewing that. The Hydreight, if I go a few months back, went public less than a year ago in December 2022. Now, We had to wait for our OTC and DTC eligibility because that's a US story that people in the United States, every time we go to an event, they actually try the app and they feel different, especially for a small cap company. Then while we're focusing on the fundamental of the business and growing the business in starting later Q2 and early Q3, we started doing more capital market activity. We're not a big fan of creating just a hype by 1 or 2 marketing campaigns, just to see that spike. We started having meaningful conversations. We started doing, more educational pieces, from the video to webinars to emails, going to more quality events in different areas and meet the right investors. In last 3 months, we had over 100 meaningful meetings with brokers, bankers, investors, through roadshows, through different events that we attended. We just came back out of one in on Sunday, that out of 50 companies, we're awarded one of the top 3 companies from the investors' perspective. This is an untold story. We need to continue our effort with educating the market. We need to continue our effort in, proving that the projections that we are on the right track, delivering the numbers, and getting into more people's kind of like inboxes and radars to review us and see us. I feel there's a combination of the few things that we're tackling them all. We're not just sitting aside and just convincing ourselves that the market is down. Definitely that's a factor, but we don't slow down. We're just going hard, having meetings, talking to different people, going to different webinars, and having educational contents out there for people to understand. Now, one more initiatives that we have started it, and we're gonna put more emphasis on that, is we have 2 groups that they can be our shareholders. One group is our nurses, that they pay us and they are part of the community. And the second group are our customers, that they downloaded the app and they are using that. So we started educating those 2 groups about the fact that the Hydreight is public. So one of the things that we've done, again, we're taking steps carefully to make sure we're not passing any rules or regulations, running it by a legal team and all that. So the people who already have the app, since a month ago, a new tab was started as an investor tab on our consumer app. Now, on every receipt, on every email, on every notification will be added. Now we're holding webinars for our nurses and our business partners, that they can hear about the capital market side of our story. Because think about it, if Uber could have get all the Uber driver as their investors, those are the best investors, because they see their hard work has a higher reward than that. So again, I don't know if I answered your question, but that's how we look at the capital market, and we're not slowing down. We're just gonna continue to be persistent with our story and delivering our story to more email boxes and more to get more eyeballs.
No, I think that was a great answer, Vahid. Thank you. Okay, I think we've got time for one more. More of a logistical question, I guess. How are the drugs delivered to the patient's residence, so that the nurse or nurse practitioner can administer the medication? And maybe, Shane, can you go into the differences between the 2 pharmacy licenses, please?
Yeah, so again, that's part of the pharmacy themselves, rules and regulations. So when we first founded the company, the rules and regulations were quite different than they are now. Pharmacy boards have to deal with the 503Bs. So essentially, most 503Bs, again, slightly different than a 503A, which would be your traditional Walgreens or CVS, will deliver either to an office or in some cases a residence, right? In most cases on our platform, because of our structure, each nurse is actually part of the medical network. Okay, so it's essentially the medical network that they're delivering to, so there isn't a problem there. And what was the second part of the question, Julia?
So I think the second part was talking about the 503A and 503B pharmacy product.
Yeah.
So as we transitioned into, for the lack of a better word, higher levels of medicine, you are transitioning into what's called patient specific. What that means is the pharmaceutical itself will be sent directly to the patient, and the service provider will come and administer. So again, there's different rules around certain levels of medication, NAD+, semaglutide, they would fall into what's called a patient specific. So again, we have that full flow from I'm looking to get this service. In some cases you need a lab test, which again, service provider will come out, results will come back to the app. Immediately there's a doctor on the line to review the results, and then the medication can be dispatched. All of this is in a seamless flow, incredibly complex to do, but when you roll it out, you now change the landscape. You change how these services are offered across all 50 states, which is what we're super excited about next year.
Awesome. Thanks, Shane. Okay, almost 5 to 10. I think we're going to have to cut it there. We also have another presentation after this. Thank you to everyone who attended today. And for the support. There's been a number of investors just saying thank you and continuing to express their support and gratitude to what we're building. So appreciate that. Again, please reach out to me directly or Shane or Vahid if you have any more questions. I'll try and answer the rest as we didn't get to all of them. Have a lovely rest of the day. And for those of you in the US, happy Thanksgiving.
Okay. Thank you.
To everyone.